आप सभी जानते हैं देश की
Friends, today I am proud to share that India and Mozambique are building a new chapter of partnership. From the fields of cashew and pigeon peas to the vast reserves of natural gas, our cooperation is growing stronger. This trade vision of $10 billion by 2025 is not just about numbers. It is about prosperity for farmers in Mozambique, an opportunity for families in India. Together, we will write a new history.
It starts with a near silence and then a sudden flash of numbers, $10 billion, but the world isn't talking about it yet. Instead, there's a small, dusty port in Mozambique where crates of cashews stack high like golden bricks. A lone container labelled pigeon peas to India is being loaded at dawn. That's where the whisper began. What if Mozambique and India could build a $10 billion trade corridor by 2025? Right now, people don't see the connection. But that pigeon pea container, that's the spark. And that spark could light an entire future we haven't yet imagined. Stick with me, because in just a few minutes, we're going to unravel how humble pigeon peas and cashews and LNG could reshape nations. But first, how did Mozambique even become a trade footnote for India? Let's go back and see how it all began. Mozambique isn't a trade heavyweight yet, but it sits on a gold mine of agricultural exports. Cashews, they're everywhere, brimming with both flavour and value. India eats more cashews than anywhere else in the world, and Mozambique grows some of the finest. Then there's pigeon peas, little legumes that feed millions of Indian households. Mozambique exports them by the boatload, but there's more to that trade than meets the eye. Imagine rural farmers working the fields by hand, harvesting pigeon peas and cashews, stacking them into burlap sacks. Trucks rumble toward the coast, exporters pack the containers. Ships slice across the Indian Ocean. That gear shift from field to port, from port to India, is already worth hundreds of millions a year. But here is the thing. What if we didn't just settle for a few $100 million? What if we zoomed up to $5 billion or more using the same crops? You might be thinking, that's a leap, but hold on, this is just the beginning. Up next, we'll see how energy transformation could catapult that number even higher, so don't click away yet. So cashews and pigeon peas laid the foundation. But peanuts and peas themselves can only take you so far. Enter LNG. Mozambique sits on massive offshore gas reserves. Companies have discovered huge fields. Natural gas is heating up in India, desperate for cleaner energy. Picture floating platforms out at sea, drilling rigs glowing against the horizon. Imagine pipelines stretching across the ocean or tankers loaded with chilled liquid natural gas heading toward Indian ports. If you scale up exports of LNG, the trade value shifts massively. One tanker load can be more valuable than thousands of tiny sacks of legumes. The math is staggering. Even a modest LNG export launch could turn $1 billion of annual trade into $4 or $5 billion. But there's more. LNG doesn't just boost trade, it demands infrastructure, ports, processing plants, storage tanks, road networks. We're talking deep investment in Mozambique's economy. And that's where the trade vision starts to take shape in earnest. Curious how the cashews, the peas, and the pipelines all intersect? That's coming up, but first, what about the resources beyond agriculture and energy? Mozambique isn't just fields and gas. Down in the earth lie titanium, graphite, and rare gemstones like rubies, minerals that feed global industry. India has booming sectors: electronics, automotive, jewelry that crave those raw inputs. Titanium from Mozambique could go into airplane parts. Graphite could help battery production. Rubies could power jewelry exports. But right now, most of those resources go to China or stay untapped. Now imagine a freight train loaded with satellite-grade graphite, or a shipping manifest full of titanium ore, bound for manufacturing hubs in India. That's high-margin trade. Combine agricultural exports, LNG, and minerals, and you have a trade portfolio that suddenly looks like a balanced, multi-headed beast. One head is food, one is energy, one is raw materials. And each adds not just value but resilience. But if that sounds utopian, hold tight. Next, we lines flip the perspective to see what India exports back to Mozambique and how that completes the trade ratchet. Trade isn't one way. Mozambique buys from India, too, and it's not small. Think textiles, Mumbai factories waking before dawn, weaving cloth that ends up in Mozambican markets. Pharmaceuticals, tiny pills against malaria or treatments delivered to rural clinics. Machinery, tractors and pumps that transform farms. And software, Indian IT firms providing logistics platforms for port management, customs tracking, and mobile payment systems. Now imagine a Mozambican port buzzing with activity. A truck rolls in, unloading machinery from India, then rolls out, carrying cashews and pigeon peas destined for your kitchen. A tablet shows the trade balance, another container arrives, laptops and hydraulic parts. It's a Weber two-way street, and that interdependence drives massive volume. We're not just talking billions in Mozambican exports. We're looking at billions both ways, adding complexity and revenue for both economies. But that flips the lens. How close are these two nations to actually hitting $10 billion total trade? That's our next stop. Here comes the hard part, projecting the trade pathway. Today, Mozambique-India trade might be in the low billions. So how do we jump to $10 billion by 2025? Let's break it down. Suppose agricultural exports ramp up from $0.4 billion to $2 billion, led by expanded cashew and pigeon pea production. Add LNG exports, maybe $3 billion a year in energy shipments. Add minerals, graphite, titanium, rubies, say another $1 billion. Now on the import side, Indian goods flowing into Mozambique, machinery, textiles, pharma, IT increase trade by another $3 to $4 billion. Add it all up and suddenly $10 billion feels plausible, but it's not just arithmetic. It requires infrastructure, it demands investment. It demands reliable trading corridors, streamlined customs, and international finance. Think Chinese-built ports, but this time supported by Indian development banks. Think special economic zones, think logistics arms and tech platforms. That chain of capabilities is what makes or breaks the vision. And if this path falls apart, what breaks first? Let's explore those risk points next. The big vision sounds exciting, but nothing is guaranteed. So what could go wrong? First, political instability. Mozambique has had unrest in the north. If violence flares, ports shut down, shipments stall. Investors get cold feet. Second, price volatility. Cashew markets plunge, gas prices fall. India might turn to cheaper suppliers. That undercuts profit margins. Third, infrastructure bottlenecks. If ports don't expand, if roads wash away, if energy projects stall, then volumes stay low. Trade chokes not on demand but on physical gaps. Fourth, diplomatic friction. Trade often mirrors political warmth. If geopolitics cools between India and Mozambique, funding dries up, logistics meander, and trust disappears. But imagine all those risks aligned and, still, you've got the structure in place, and trade pushes through. That's resilience, and behind that is the human story of farmers, dockworkers, truck drivers, and entrepreneurs. Which brings us to the final section: what this really means for the people living it. Numbers matter, but only when they translate into livelihoods. Picture Maputo neighborhoods, where a cashew trader used to scrape by on tiny margins. Now she can ship regular containers to India, investing in her children's education with fresh profits. Picture Mozambican farmers, who previously sold pigeon peas at rock-bottom prices, now they're organizing cooperatives, getting better deals. And picture Indian businesses setting up in Mozambique, building cold storage plants and digital corridors, creating jobs. This trade vision isn't just about billions of dollars, it's about local streets, families, and futures. It's schools, kitchens, and small businesses. It's buses that run better, shops that stock better goods, farmers who don't go bankrupt. And when these individuals thrive, the national economy follows. But the real question isn't, can we reach $10 billion? It's, will this trade vision transform ordinary lives, or remain just numbers on a spreadsheet? Hold that question, because our conclusion is coming up next, and it resolves on that human note. So here we are. A vision of Mozambique exporting cashews, pigeon peas, minerals, and gas to India while importing machines, medicines, and textiles in return. A vision that leaps from $1 minus to billion today to $10 billion by 2025. It has a vision built on agriculture, energy, resources, trade logistics, and digital infrastructure. But more than that, it's a vision of transformation of real change in neighborhoods, farms, ports, and markets. That container at dawn, labeled pigeon peas, to India, is more than a shipment. It's a symbol of possibility. We've walked through the fields, the rigs, the ports, the factories, the straits. We saw the numbers and, more importantly, the lives behind them. Whether Mozambique and India ever hit that $10 billion mark isn't the end of the story. The real story is whether they chase it by building infrastructure, forging trust, investing in people. If they do, that vision becomes not just a headline, but a reality, a ripple of change, a shared future.